Now let's get right to Melissa Armo, founder, owner of the Stock Swoosh. Melissa, great to see you. I'm glad you're with us. We had obviously a 3-day sell-off. People certainly have used it as a buying opportunity, at least in part. Now, here's the question for you. Do you think that was a big buying opportunity, or was this your little warning to say, hey, take some profit off the table now while you can?
I would definitely be taking profits off the table because we had a nice run up. We made brand new all-time highs in every index except for the diamonds. And really that was because I think Boeing is such a drag on that ETF. But if you don't take profits at some point, when are you taking profits? It depends on your time horizon. I think people could stay in the market long term if they're invested for retirement. But if you're an active trader, if you're doing options, if you're a day trader, if you're doing swing traders, you've got to have points along the way where you're taking partial profits or full profits off. And remember, this is an election year. So we're not that far away from the election. Anything can happen, and the market could have a tremendous reaction either running up into the election or right afterwards. So you want to protect those profits. And I think last week was a sign when we had good economic data on Thursday and we sold off, and then we continued the sell-off on Friday when we had a lower unemployment number than expected. You have to say, wait a minute here, this might be the end of this temporary run-up. We may not see brand new all-time highs again before the election.
Here's the thing is that, I noticed in one of your talking points, you said, look, if we don't get this vaccine, how's the market going to move to highs? And the market's path of least resistance really has been to the upside, has left so many people over the last more than a decade scratching their heads. The market's long in the tooth. It's frothy. Oh, a correction's coming. All of these things. But at the same time, people have FOMO. They feel like they missed out, and they're still chasing. I know people who just recently put in huge money into technology and healthcare. Now, names like Apple and Microsoft, you are sort of tepid on at this point, right?
I wouldn't get into any new long positions in those stocks, particularly this tech sector, because again, they've had some really nice run-ups. I wouldn't get into any long positions until earnings season. See how they fare out in earnings season. Remember, earnings season starts in about 6-7 weeks towards the end of October. Wait until those companies report and see how they fare out. It's not that far away. This is a position, and I'm just gonna call it. I'm gonna say right now, I think September. Today's September 9th, and I actually said this to my traders about 2 weeks ago. I think September is going to be a bearish month. I think September is going to be a bearish month for the market. We already started out bearish. I think that's going to continue. I think the rally today that we're seeing, this rally up, is because we dropped down for 3 days, and typically people like to buy and support, but I don't think we're going to run back right up to the highs. I think this is a bad place to buy in here today. We have a long way to drop, just like we have a long way to rally up, but we've had that rally, and at some point here, I think we're running out of steam. Today, I'd call this kind of like a dead cat bounce, except for you say that in things that are trending down, not something that's trending up, and the market is trending up. The market is strong, but I would qualify this today as almost a rally into resistance or like a dead cat bounce. And I wouldn't be surprised. I don't say 100%, but I wouldn't be surprised if we fall tomorrow.
Fall tomorrow. All right. Well, we'll have to wait and see on that. We'll get some jobless claims. We'll get continued news on energy, for example. We got some today, some tomorrow. ECB. Right? We have still some earnings on the docket. Tell me why a name, you and I have known each other for some time now, a few years. Disney was a darling in your portfolio, or a name that you recommended. You took a break, but you're back on. You're back on. You like Disney, the Mickey Mouse ears once again. Tell me why.
Well, I do like Disney, particularly when you look at the last couple of days of trading action in Disney and you look at the massive sell-off we had in the market. Disney was holding up. Disney was rallying. Disney was green when the market was red. And Disney is strong. And what I like about Disney is they're branching out. They're trying to do things to compete against people like Netflix. They're doing this streaming stuff. And again, people are spending more time at home. They're on their tablets. And I really like that Disney is trying to branch out more into this arena with content. And again, I like the way the stock is holding up. So that is a big watch for me the next time that stock reports. And I think long term, that's a nice long. I mean, if you wanted to buy and hold something in your portfolio, I really like Disney.
All right. Good one for the grandkids, maybe, right? Melissa Armo, nice to see you. Thank you always. Thanks for joining us here on the Watch List, founder, owner of the Stock Swoosh.